Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday, the 18th of January. So as the month flies past, let's have a look at what's going on. Well, firstly, let's look at the news events. So look at what's happened over the through the Asian session there. Australian employment data came in at 3.9, so pretty much on line there. However, the employment change is quite considerably different, which caused a blip through the evening or Asian session there. It's not the best of looking figures. Looking ahead today, there's not a great deal there that I'm looking at and thinking can potentially move the market anything more than what we've already seen this week. We've got of course, got likes the ECB speakers, etc., all speaking at Stavos, but there is, I'm just looking, unemployment claims. It's the weekly figure for the US. There's not a lot there that's likely to move the markets. Well, famous last words. Got no regular data coming out. Let's rephrase it. Right, let's look at the markets then. And starting off looking at the euro dollar. Well, we saw a bit of a bounce towards the end of yesterday. Looking at this, it's quite ugly. Sort of pushing through into 3 o'clock sort of time. It started bouncing. Is it going to roll over again? It's not the cleanest looking chart what I'm looking at here in this short time frame. It's got potential to get back to its pivots, etc. This is the quarterly pivot. It's been obviously hit and dancing around. Might hold on to that a little bit further. Just looking up the time frame though, it's not the cleanest. The problem I keep on referring to on the euro is it's not the best of markets to trade at the moment. So best thing is let's not try and trade it. Now the pound has got a bit more boost in with the numbers that came through, the inflation figures that came through yesterday. Really held the markets, or the price held on okay, even though there is the expectation still that rates will be cut this year, and not probably that. I can't remember what the dates were now, but there's still an expectation rates will be cut. Anyway, higher low on this hourly picture you can see, and it's just whilst the other markets are all dipping and got a sort of bear flaggy looking price action, this is looking just that bit more positive. So I don't like the fact that it's so different to the other markets, so I'll leave it on that basis. US dollar yen, well, we've got a nice flag appearing at the tops here. Maybe if it can break through the flag there, it could be on. Certainly looks okay, but at the moment it's below its pivot, and the more it dips down here and drops away, well, again, just step clear, leave it until it gives the signal. Australian dollar. The Australian dollar, well, it took a run down earlier this morning, but it's recovered. It recovered quite quickly off that. It may, well, there's a number of reasons why it might be like that. Generally, the employment data is still pretty tight. I mean, 3.9% is a reasonable number. In fact, it's probably too tight for keeping inflation down. So hence why we've seen it recover quite so quickly. Anyway, ignore the spike, draw the line across there. There could be an option, but there's a better option coming up. In fact, I'll do it next. And I'm liking the New Zealand dollar now. I'm still short on this. It's not moved a massive amount. Expected a bit of a retrace at some point where we've seen it. Now this it's making it having an attempt at breaking this trend line at the moment. We'll just see if we get a continuation. That could be a day trade. I'm on a swing trade on it. It's not up very much at the moment. This retrace hasn't helped things. It looked pretty decent yesterday afternoon when it started rolling off there, but well, it's a patience trade, not a 5-minute wonder. So you just leave these things. Still expecting it to come down quite a bit further. So we'll leave that for now. But that's, as I say, it's possibly one of the cleanest looking bits of price action. That and the yen this morning, probably the cleanest in terms of pattern wise. Other markets, US dollar, Swissy. Well, the Swissy, again, a bit like the pound, it's just sort of it's going the other way, isn't it? Swissy, it's softened against the dollar. This is the dollar strengthening. It's not. Yes, yeah. I think in all that term I just said there, what I meant to say is leave it alone, Kim. Just missed the US dollar CAD out here. Consolidated. Morning, Dean. Retracement coming in here on this time frame, on this 4-hourly time frame. Maybe it's not too bad, but it's almost down into its S1 territory. It's below its daily pivot. I'd rather, if I was going to be taking a long on this, I'd rather be on the see the price above the daily pivot here. The other thing is, it's all this chop just yesterday. Maybe these markets just running out of gas a little bit, need a bit of consolidation. That was, to be fair, near its high, but it's like a lot of the markets, it's retraced since. Right, Euro Yen, this is the last one I'm going to look at here. This is just continuing, has been continuing to shove up. It's had a decent move, yesterday afternoon. My auto trader ticked over and gave me a nice little winner for the first trade I've taken on it this year. On the Euro Yen. Okay, coming off a little bit now. Maybe we'll see if there's some support. There's some potential to get some support into the pivot there. But generally, the picture is that the yen is just that little bit stronger against the dollar. Than the euro is against the dollar. I'm just looking, so I'm just getting a picture of what they're like. So this movement here, the yen against the euro, or the euro against the yen, euro just that bit weaker, maybe. As I say, I'll sit that one out and wait. I'll keep an eye on it. Right, that's all I'm going to do for the currencies at the moment. We'll run through them at around about 8:35 in my trading room. If you want to come and join in, the links on the bottom. Side of that, then, just a quick look at gold, and well, just carried on. It's tripped to it's down to it, and finally hit the yearly pivot. That is it's bouncing off at the moment, so it has got a bounce. It was so close to it. So often you get it's like a draw, but we'll see what sort of bounce it will get here. In fact, on the shorter time frames, it looks pretty bearish for lower highs, lower lows, and you've got this sort of bear flag running over it. Bigger picture, I'm still sort of looking at it in a sort of bullish view, but it's on this shorter time frame not looking quite so good. The bigger picture, I guess, is tainted by the situation in the Middle East there, which would often see gold push up. It's not at the moment, which is strange. It's like a lot of these markets, they're not really kicking where I would expected them to do. Now, talking of which, oil, beg your pardon. With the situation that's going on, you would expect this to be firing up there, all the saber rattling. However, it's doing it, but not to the extent. It did break its trend line I've drawn on the dailies there. There you go. It did break that trend line, and it isn't. The problem is it's in this pendency sort of price action, a triangle price action. I never liked them, and this one's fired out the bottom there. False breakout maybe. It came down quite quickly in the morning there. Eventually, just as I was saying goodbye to the guys, and then it turned around, and of course, afternoon 2 o'clock, turned around in this case, and off it's gone since then. But a lot of the market's changing, but it wouldn't have been a buy for me. Yeah, it looks nice when you look at it like this, but it's going against its near-term trend. For me to be buying this, I want to see it out of this mess that it's sitting in. But I could be a buyer at some point. Anyway, moving on, S&Ps. Still continuing this sort of yesterday's pushing down there. Just look at a 60-minute here. You can see again it was sort of the second shift saw a bit of a bounce, but overall it's still got lower highs, lower lows. Short term, intermediate term, it's got lower high in there. It's not looking particularly pretty. Daily point, from a daily point of view, still double top still in play, effective or potential in play. As I said, it doesn't become a trigger for me until it breaks the low between the two highs. So at the moment, yes, it's double topped. It might just start playing out in a range. DAX, other markets are really looking pretty similar. The US markets, that is. The DAX sold off yesterday again, got caught the bounce later on. Same sort of time, that sort of 3 o'clock bounce there, there would have been a bit of divergence over these lows, and it's gone on the short term, but it's bigger picture maybe, but I would rather be looking at the break the upside, not trying to buy it down here whilst it's doing what it's doing. It's just too messy for me to want to, for my style of trading, I should say. And I realise that people will want to be buying the DAX at every opportunity because, of course, it's been going down. It's probably oversold. A number of indicators will be showing it oversold on those intermediate time frames, but it's not my style. I want to see it push up, give me some more of a better signal. Right. I'm going to leave it there. I'm going to wish you a great day's trading. As I say, come and join me if you want. Otherwise, I'll catch you in the morning. Bye for now.